Yo, hello everyone and welcome back to the Dividend Investor. I'm back with you today with another video. And the topic of today's video, I'll be going over the Tesla stock and whether you should invest in Tesla or whether it'd be a good fit for your portfolios. Before we get into the context of the video, guys, if you could please like this video and subscribe to the channel if you're not already, and if you're obviously a subscriber who's watched my videos before and I'm back, welcome back. Hope you enjoy this next video. So yeah, I did the same video with Apple, guys, around about a month ago. So I thought I'd be doing sort of like a mini series where I talk about different companies and whether you should invest in them. Just go over the companies on simply Wall Street. So today I'll be going over Tesla. Let's have a look at the summary page. So Tesla has a market cap of $147.2 billion. And Tesla Inc. designs and develops, manufactures and sells electric vehicles and energy generation and storage systems in the United States, China, Netherlands, Norway, and also other countries internationally. So look at the value. It's a health and more of a future stock. Obviously not a past, as electric cars are obviously more towards the future. It doesn't pay our dividend at the moment currently, which is fine. I think the growth of Tesla will probably outweigh any dividend that it could possibly pay, especially over the next few years. The latest share price, as you can see, guys, the Tesla stock, I just think it's just going to go bigger and bigger. The last year it's gone up. So this time last year it was at $306 and now it's at around about 700 something dollars. So it's a massive increase up there, guys. But one common denominator with Tesla is, even when the share price, it usually does dip quite a bit, but when it does rise again, the rise is usually double the fall. So if you look at the last 3 months, you can see they've been going up then down, but each time it's gone down a little bit, the growth back up has gone even more, as you can especially see in the last month. $592 it was on the 22nd of January, it dipped down to 545, and a rise to 636, and a massive rise all the way up to $889, which is an absolute massive increase. So as you can see, it's now dipped down again to just over $800, but I do feel the next leap will be even greater, as I think this stock will just continue to rise as they need. Obviously they won't be using oil and everything forever, so electric cars the next 10 years, it will be a massive thing. So the dips will be outweighed by the growth in the long run. Market performance, the 7-day return 8.7%, 1-year return on massive 163.8%. So if you've bought a few shares of Tesla a year ago, you'd be a lot more better off now. And there's shareholder returns. So look at the valuation of Tesla at the moment. So at the moment it's $807, which is undervalued, but they do think a fair value would be $1,000. So according to Simply Wall Street, Tesla will obviously go up more, but obviously we can't predict at the moment, but as obviously I can tell, it will go up. So look at the future. So as you can see, Tesla's revenue at the moment is, I can't actually tell how much that is, but obviously it's around probably about 20 billion. But the estimated for the future years, guys, you can see the revenue there, it's just going to up and up and up, just to around the $80 billion mark. So this company, guys, I do think it is a brilliant company and will continue to grow. Let's scroll down and have a look at the health of the stock. So the short term, it's got $12 billion in assets and $11 billion in liabilities. 22 billion in the long term, $22 billion assets and $16 billion liabilities. So obviously, as long as they have more assets and liabilities, that's always good. Every company has debt and liabilities. The balance sheets, the physical assets, inventory, cash and short-term investments, long-term, plus other assets, receivables. So you can see physical assets are the main assets at the moment. Obviously, they have the liabilities and equity, they have debt. There's some good equity. The dividend, they don't currently pay a dividend, which is fine. As I said, the growth will outweigh any dividend. The management, so a bit into the history of the CEO Elon Musk. 47 years old. He's been at the Tesla tenure for just over 11 years now. He's the founder of Tesla and the chief executive officer since October 2008, so he's had plenty of experience. And I'm not going to bore you guys with reading all about Elon Musk. You can do that for yourselves on the internet or anything, but obviously he's well known. Now let's have a look at the information of stocks. Obviously Tesla Inc. on the LSE exchange, founded back in 2003, automobile manufacturers in the automobile sector with a market cap of $147 billion, with 183.99 million shares outstanding. So you see that, you can still find a lot of information on this. Number of employees, 48,000 over the different locations of Tesla. I think it is a good one. So yeah, guys, I do think Tesla in the long run obviously will continue to grow. It might dip in the short term, but in the long term it will always grow bigger. And I obviously, when fractional shares come in, as I can't afford a share at the moment, I will be purchasing some Tesla. So yeah guys, like the video and subscribe if you haven't yet. That is it for today's video guys. Take care. Bye.